of your CEO and the business, that actually we're returning to you a lot of money in terms of indemnity benefit. It will vary, of course. In some of the higher volume, low value personal lines businesses, it's a lot less, but then again in some of the commercial lines businesses, the actual return is even better. So it averages out somewhere between 12 and 14. We then started to get really smart and actually thought you can actually get technology to give you a hand in identifying fraud, and it enable you to spot links between people and identify risks which actually otherwise you wouldn't have been able to identify. And I am being product agnostic at this point. I might go on and tell you about the one we use in a moment. So we've got the technology, we've set up an operating model, and we've designed processes to identify fraud. And that's where the market headed. And it's pretty logical because you can easily measure your return on your investment, and it's easy to understand. So you say, give me £1, I'll return you £14. People think, that's pretty good. So that's what the market did. And technology, and again, I'm trying to be product agnostic, you're looking for something that will automate the identification of fraud. You can develop scorecards for all your business areas. It'll give you a single view of the claimant, all the historical claims and policy data, and you should feed into it the intelligence that the market has got and that you have in your own company. So you will have a much better way of evaluating the risk. And obviously we're looking to maximise our return on our investment, and equally we're looking to concentrate on the population which is going to give us a best return. Because in looking at fraud, the worry in a business where customer journey is very important is that we're going to have a lot of false positives. So we're going to start hacking off our honest customers who've been caught up in our processes to identify fraud. And this is a recurring theme in the industry now. And it is extremely difficult to do that. So we have this sort of funnel effect in fraud where you pour in all your suspected fraud at the top and you have a proportion of it which falls out the bottom, which is proven fraud, but actually there's layers in there of genuine customers that we've actually put through a process, if we're not careful, which might stop them coming back to us again. And certainly in our company, NPS scores now are king, so Net Promoter Scores we measure to death, and if I was doing anything in our world which was endangering those kind of returns, I'd get told pretty quick. But it is difficult, and it still remains difficult, to actually identify who are the fraudsters from your population of claimants. And we live in this customer-obsessed world. And I don't think we've got this right now, if I'm honest, in the industry. And until someone comes up with an infallible system, I don't think we ever will, but we're working on it. One of the things we look at is what's the drivers for fraud, what makes actually people commit fraud. And I'm sure you've heard all of these sayings in the past. People regard it as a victimless crime. We're seen as easy touch. There was a very good piece of research done last year by Professor Martin Gill, who identified one of the drivers, and this is probably not rocket science, frankly, that one of the reasons that they fraudsters attack insurers is because they actually think they're not going to get caught. But then I think every criminal who does a criminal act doesn't think he's going to get caught, does he? Because otherwise he wouldn't do it, one assumes. But they think we're an easy touch, and therefore there's a very low risk of them getting caught. And some adopt the attitude, they treat it like almost a life insurance policy. So I've paid in all these years, I'm entitled to get some of it back. I've heard that given as an excuse. I'm entitled to it. When you look at the public surveys that have been done, this is quite an old one, but actually if we repeated it again, I'm sure it wouldn't be far off. I'm heartened to see that 5% of people wouldn't be put off to committing fraud by anything. which has probably kept me employed for a little bit longer. But you see the increasing scale of things that would put people off. And I would have thought going to prison would have been the top one, but it's not. Anybody want to hazard a guess at what the top reason that people stated would put them off committing insurance fraud? No.
Publicity?
Sorry?
Publicity?
No, that's already in there. Being publicly named and shamed. Sorry?
Losing their job.
No.
Refuse feature cover.
That's it. And that's the one. The thing that scared people most was being refused insurance cover in the future. And it's a bit like, who wants to get a bad credit history? I mean, it will blight your life. If actually you can't find an insurer that wants to offer you cover, or at a reasonable price, I'm sure we'll get somebody will quote, but for a reasonable price, it is really going to blight your life. There was a question when we looked at this. So morally, and the FCA are quite comfortable with this. Well, if they've committed fraud, it's their fault, and actually they should suffer the consequences of their actions. So they've got no problem with these people finding it difficult to get insurance. So strategy. If you're going to start from scratch and you're going to build a fraud strategy, what would it look like? Now, I'm not going to go along and say this is what we do in RSA and this is perfect, because it's probably not. And in any event, I don't know any two insurers that have exactly the same counter-fraud model as each other. And that's kind of obvious, really, because if you look at the way the companies are structured, they're all going to be slightly different. And so I'm saying it doesn't need to look like this, but these are the elements that should be present in it if you were starting from scratch. And I will come back to this subject again in a minute. Firstly, you should have a group or a company policy which should set out minimum standards that the company want us to adhere to. It must have executive oversight. If it's not driven by the top, then it's not going to succeed. And again, I will mention this later on. You have to identify a fraud appetite. Now, it's easy to say, and I've heard people say, oh, we've got a zero tolerance for fraud. But that's an absolute nonsense. Because if you had a zero tolerance for fraud, you wouldn't make any money. Because the cost of investigating and dealing with lower-end fraud would by far outstrip the benefit that you're going to get. And the truth is, ladies and gentlemen, and I'd never say this publicly outside, but you are recording this, aren't you? So maybe I am. But within the confines of Lloyd's old library, the reality is we can't investigate low-level insurance fraud because it is not economic. So you have to set an appetite which balances your customer and your process against your indemnity. So if you're going to create a process which is so is going to be like that funnel, you're going to be pouring lots and lots of people through it, you're going to certainly hack off your customer, and you will still get your indemnity, but actually if you concentrate on the higher risk, leave the vast majority of your customers alone, and certainly ignore the low-end stuff unless it's absolutely nailed on, because it's uneconomic. So fraud appetite needs to be set by every insurer, and of course it is a competitive market and it's a competitive issue, so it's up to each insurer to decide what their particular fraud appetite would be. You could say, and we do say, we have a zero appetite for staff fraud. Now that's quite simple. We will not tolerate any staff who commit fraud or involved in dishonesty. But in terms of insurance fraud, it's not the case, in my view. And the other point on that, before I move on, is the FCA, as I mentioned a little while ago, says that you can't simply ignore fraud and pass the cost on to your customer by way of premium increases. But actually, if you spend twice what you're saving to investigate it, so if you spend far too much in tackling fraud, you're going to be passing that cost back onto your customer by way of premium increase in any event. So, and the FCA does acknowledge that our response needs to be proportionate. So you can't simply tackle every fraud on a zero tolerance appetite. You need to obviously, whatever you are going to do, you need to link in with your regulatory and compliance and your risk management mechanisms, because they have a skin in this game. And you need to carry out a gap analysis to start with. So actually, here's we got the minimum standards. Where are we ranked against that in terms of capability? And wherever you are, you need a response plan to actually tackle what it is. You need to raise awareness, and this will be almost inevitable in every model, and you would need to provide some level of training. I know this is rocket science. You need to identify fraud, and importantly, it's not just about identifying fraud at the claim stage, which is where we all started. It's about actually the front end of the business, and I'll come back to that later. Technology, I've already mentioned, can help us in this process, along with analytics. And we would add in some important factors. Fraud intelligence is immensely powerful in tackling fraud. We've got, in my company, something like 125,000 entities that we have proven to be fraudulent in the past. If we don't use that intelligence in actually tackling people who are making fraud, we will know them somewhere. There's a good chance. And if we don't know them, someone else in the market will know them. So we share intelligence through the Insurance Fraud Bureau. And again, I'll come back to you on that in a moment. You will have some sort of specialist fraud handling or expertise, and you will certainly have some sort of fraud investigation capability, which you could do either internally or you could outsource that function. It's a matter of choice. You obviously need to measure yourself to death to know what you're doing, and you need to have key risk indicators. So what are we seeing in what we're doing that's actually alerting us to an increase in risk? And I would link this back to the analytics. So the clever use of analytics can tell you actually this area of the business, this route to market, this claim type is where we're seeing an increase. So you need to use it to inform where you should be looking. Have we been successful? I'm going to show off now. RSA won market-leading fraud strategy back in the Insurance Times Awards. Crikey, 5 years ago now. But I was very proud. So we have a good model, and it's not dissimilar now to it was then. And this was taken before I had several bottles of champagne and something else. I'm glad they didn't take it a bit later in the evening, because it wouldn't have looked pretty, but it was a great night. Peter asked me to mention some war stories, and I could have sat you here for 2 hours and told you one after the other war stories. But I actually think I'm going to sell a couple, but I'm not going to labour on it, because I think the message I'm trying to get across is a bit higher level than that. Of course, we've all got loads and loads of war stories. And some of them, the ones I've chosen here, just show the kind of diversity of fraud. This guy stitched up. Mr. Ells was 66 years old, unblemished character, owned a very successful clothes shop in Savile Row. He had a genuine escape of water claim, and he decided it would be okay to inflate the claim by £70,000 by producing false invoices of stock he had and was damaged. And we actually thought, nah, you can't do that, and obviously caught him. He got imprisonment, 66 years old, successful businessman. The judge decided the level of dishonesty displayed in doing what he did was such that he couldn't have any alternative but to send him to prison, which is a kind of bit weird. Another one, this was a tanning salon. I'm not that I ever used tanning salons. Bit of a tan you got on there, Peter. I'm not sure. And they had, again, a genuine escape of water, and they decided that was a good opportunity to restock all their beds in the premises, fraudulent invoices and so forth. And the young lady who ran that, she got a suspended prison sentence. This was bringing it home. This is Bray School, which are a special needs school, and they were on a one-off government grant. They bought 3 iPad Airs as a learning tool for the children, and the school got burgled, and all 3 of them got stolen. We have one of our delightful customers who made a claim that he damaged his iPad Air and sent it to us. We sent it for examination, and it came up with an internal thing. It was from Bray School, and he's claiming because it's not working properly. He obviously got arrested and so forth, and our technology partners and ourselves actually bought 3 laptops. They're not that expensive, and gave them back to the school. But it just brings a bit of human impact to some of this stuff. And I've lost count of the number of items of jewellery that we get submitted. People send in photographs of the jewellery, and when we examine the metadata in it, they're all taken post-loss. So that's interesting, isn't it? You had it stolen on this date, and actually this photograph was taken a week later. And we get done that. People sometimes are so stupid, it's beyond, and I should say fortunately, but not. Surveillance and CCTV is still a hugely powerful tool. This was David Ridsdale, who decided it would be perfectly okay for him to, he had a genuine accident, but he was so badly injured he could barely come out of his house. He needed support. He could never work again. He couldn't drive, couldn't walk, all the normal things that he would expect to do to carry on a normal life. He obviously wanted several £100,000 off of us for this, which was great until we caught him playing rugby, which kind of defeated his alleged injury. He got imprisonment. He got 8 months for his outrageous attempt. And this is quite another one, which I've called Valentine's Day Massacre. I couldn't find the footage on this, otherwise it's really interesting. This was on Valentine's Day. Now, I know from personal experience how difficult it is to get when you've suddenly forgotten, and your wife said, well, I hope we're going somewhere nice on Valentine's. You think, oh, God. And ringing around trying to get a table for 2 in a restaurant on Valentine's night is not easy if you're doing it at the last minute. This guy and this girl allegedly said they came to this restaurant at 9:30 for dinner, and on the way in, they fell into a pothole that was in the car park, and the guy suffered some really serious injuries to his ankle. When we looked at the CCTV, well, firstly, the guy said, well, it's funny, because we were fully booked out. The kitchen closes at 9, and by the way, these people aren't on the table reservations. When you look at the CCTV, they come into the car, they park the car across the road, they come into the car park, they're photographing a hole in the car park, and that's all they do. Measure it with a ruler, and then get back in the car on the other side of the road and make up this story and try and claim off his commercial insurance on the pump. That was quite funny. Well, we thought it was humorous. And I've got many, 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 many more of those type of stories, but I'm not going to go into all those. But we still, all the sort of things we used to do before, we still get. It's not a week goes by where I don't laugh at one of the kind of set of circumstances where we caught people, but we do still get taken by surprise. Noise-induced hearing loss. I'm sure you've all heard of that. Yeah. Basically, the creation of Alto and the introduction of LASPO conspired to make the lawyers think, I can't make as much money out of motor claims anymore, but here's a good opportunity. There was no portal rates, and the average solicitor legal costs on these claims is £14,000. Talk is cheap until you have to talk to a lawyer, which I think is probably about right. And I don't know how moral it is that the actual average claimant receives between £1,500 and £3,000, and yet the lawyer's pocketing £14,000 in costs. It doesn't seem right to me. And the rejection rate on these claims, I think it's at the upper end of this range, is approaching 80%. So they're pouring in claims, which rose by about 250% in a very short period of time. And they're just throwing so many claims into it to bring us all to our knees, where we can't cope with the huge volume, hoping that we'll settle some of these. But the rejection rate now is 80%. And as an industry, we didn't actually wake up to this in time. We are now sharing intelligence and strategies, but actually we took a bit of time to do that. And of course, the government could see this happening the same as we could. They kind of pushed us to set up ELTO, and here we are as a direct result of it. So the government needs to recognise the problem here and take action as well. I'll come on to that a bit later. So come back to the strategy. The missing piece here is actually cross-market involvement, because if you set all this up within your insurance company and you don't work with other insurers on cross-market cooperation, you will be losing out a lot. We've got the ABI Financial Crime Committee, which I sit on, which actually formulates the strategy in terms of cross-market fraud strategy. We've got the IFB, which we set up, and as Peter said, I was honoured to be the chairman of that for the first 4 years of its life. We've got IFED, the Insurance Fraud Enforcement Department, which I chair the management board on, and then we've got the Insurance Fraud Register, which we've set up. We're currently looking at the government task force report and trying to take up some of the guidance that they've issued in respect of that, and I'll come back to that, as I said, later. In terms of just dealing with fraud, there's two very broad typologies, and actually insurers have got pretty good at dealing, not perfect, but pretty good at dealing with opportunist fraud, exaggeration, misrepresentation, or making up claims, and you can actually deal with those within your individual insurance company. But what you can't actually deal with is the organised element, which is predominantly criminally motivated, and you can't really tackle it alone unless you are sharing data and looking at the overall market piece. You just simply can't do so. So that prompted us back in 2006 to set up the Insurance Fraud Bureau, and it was set up at the time to simply be a tactical solution for cross-industry motor fraud. And at the time just before it was introduced, the extent of staged motor accident, induced motor accidents in the UK was astronomical. But it took us 2 or 3 years to recognise that these networks were growing, and by the time we actually recognised them, they were worth £4 or £5 million. And frankly, you could have linked the whole country up in these. Couldn't get a police force to take it on because it was too big. And we were too slow to recognise it, too slow to take action. So we set up the Insurance Fraud Bureau. Accident management companies are the key to this, along with their co-conspirators, and I use that in the nicest way, solicitors, and we've obviously seen evidence of solicitors actually acting without instructions. I'm not saying that all do that, but on a spectrum of solicitors at the lower end, there are some very dodgy people in this market, car hire operators on credit hire. We've seen lots of instances where we've had dual periods of credit hire and astronomical charges, engineers, doctors, and the whole kind of co-conspirators that make our lives very difficult. And the gangs involved in this are, in the main, sophisticated criminals. I don't apologise for saying predominantly they are Asian, and they originate in the urban centres. I was going to say anything with a B, but Bolton, Bradford, Birmingham, parts of North London, East London. It is a very Asian orientated area of crime, but we have seen over latter years where we've had Eastern European migrants becoming involved, and very often they're working with the Asian gangs because they think they're clean skins and they won't get found out. And of course, they are not only committing insurance fraud, they're committing other areas of crime, and we have seen some of them doing this to raise terrorist financing. I'm not saying that's all that they're doing it all the time, but we have seen evidence of it. So, we actually introduced Dedeker Net Reveal, which actually later became BAE Systems, bought them, and we applied that to the industry data so that we could see across the industry. So a claim I had in my company actually linked in with other claims in other insurers, and we could see it was a network. And we could look at hotspots and focus in on who was doing this and what the localities were. And they have over the years, so 2006, in fact, we got the 10th anniversary this year, 26th of July, I think it is the anniversary, 10th year anniversary, and we have made significant impact into organised motor fraud in that time. The rings now are much, much, much smaller, and we spot them much quicker, so they don't get into these huge great balls of links which are too unmanageable. And the exposure has come down. I haven't got the figures with me, but the exposure the industry faces now has reduced significantly since 2006. Doesn't mean we've licked it completely, because these people are still making money from it, although we're making it more difficult for them. But it is now much more of what I call a managed risk, as opposed to an unmanaged risk, which it was previously. Some UK market insurance fraud. The last figures I have on this is 2014, because they're due out, they're always a year in advance, this month for last year. But I haven't got them yet, so I have to rely on the 2014 model, numbers. You're aware that the industry hold an annual benchmarking whereby we all submit our statistics on detected fraud, and although I don't see what other individual companies are detecting, I get a market picture and I know where mine sits in terms of the market, which is very useful. So the ABI estimate, this was in 2014, but I don't think it will have gone down, or if it has gone down, it won't have gone down substantially, £3.4 billion. They estimate, and I'm not sure that these figures are necessarily accurate, that claims, 13% of claims by volume contain an element of fraud, and 10% by value. I'll leave you to decide whether you think that's right or not. We have detected in 2014 £1.3 billion. Before we actually congratulate ourselves too much, you'll perceive that there's still £2.1 billion that remains out there undetected. So we haven't licked it yet. So in terms of developing a long-term strategy, it definitely needs to be market-based, and it needs to be focused more on just fraud detection. This will be a theme which I will return to. But if you think about what are you going to base your market strategy on, well, what I'd like to see is actually, rather than have to rely on detecting people, is to try and persuade people that they shouldn't commit insurance fraud in the first place. That actually it's in nobody's interest, it costs us all money, and so forth. So how do you do that? Well, coming back to this slide again, these people down here are probably our stage motor acts, the ghost brokers, these type of people, and probably they're not going to respond to anything. But this population of people here, I see it as a potential deterrent opportunity. So these are probably inherently honest people who get tempted by various reasons to commit fraud. And actually, we could deter them if we actually went about it in a focused way. So how do we do that? Well, I mentioned earlier about the Financial Crime Committee, and we have asked ourselves the question over a number of years, how do we increase the chances of getting caught and bring real consequences to people who commit fraud? Back in the sort of early 2000s, even if you got caught, you wouldn't get prosecuted. and we'd all probably just walk away, and that will be the extent of it. And that's not really a consequence. You might as well have a go if that's all that happens to you. So how do we actually bring a real consequence to people? What we actually want to do is make people feel ashamed of what they're doing, and say this isn't in anybody's interest, including yours. We've got the Insurance Fraud Bureau, which we set up, which I've already mentioned, which tackles the organised element of fraud. But there is, and you may have heard of this, there's a new strategy developed last year called 2020 Vision to take us through to 2020, strangely enough, which will actually extend the products that the IFB deal with from just motor. And the first will be liability and household. So it will be able to extend its data networking across those product lines. We're also developing a intelligence hub for the industry, so that in the industry at the moment there are so many people, and you will see lawyers and other companies who say, "Oh, I've got the best intelligence database in the industry." Well, have you? And actually, is it DPA compliant? And so forth. There's a whole raft of questions, and actually it's not in anybody's interest for us all to do that. If we had one database which was compliant, that we had a strict set of rules that how it was going to operate, and we could all access it and input to it, then that would be the answer. And that's what we've come up with. We've selected a vendor to provide it. We've developed our user requirements. We've got a set of rules. We've got the Information Commissioner is comfortable that what we're doing is fine. We've done a privacy impact study. And what we're trying to do is encourage everybody, look, don't hold your own intelligence database. Follow the data within the set of rules we've developed into this database. We'll give you access and you can file it to it and take stuff out. We're going to extend membership of the Insurance Fraud Bureau outside of just insurers, so we're looking to be more inclusive with defendant solicitors and with investigation companies, and try and widen membership to all of those who are engaged in counter fraud across the industry. So that's the plan. We set up the Insurance Fraud Enforcement Department, and we have seen a huge rise in the number of people now prosecuted for insurance fraud. We all take part in this claimed and shamed program, which you may or may not have seen, and it's about getting the message over to people that actually, if you commit fraud, this is what happens to you. You've got a good chance of getting caught. And of course, we've developed the Insurance Fraud Register, again to bring a real consequence to people that actually, remember in the reasons I gave of difficulty in obtaining insurance in the future, well, actually this plays directly into that. So we tell people, we're going to put you on the Insurance Fraud Register. You get a red card when you try and apply for a policy because people say, I'm sorry, you're on the fraud register. So we think these things have made a significant part in tackling fraud and bringing a consequence. And of course, there's been unprecedented media coverage. The media love good, juicy fraud stories. And every time IFED arrests somebody or something happens, there is a huge amount of publicity. And we operate a cheat line, which the IFB manage. It's actually now managed or operated by Crime Stoppers. And every time there's some significant publicity, we get a huge rise in the number of people who ring up and actually shock their neighbour or somebody else. But all the communication we've delivered so far has been reactive. And what we're now working on through the ABI Financial Crime Committee is actually some sort of proactive messaging. So we're looking for something like the Clunk Click campaign. It's probably not a good example with Jimmy Savile in it, was it? Probably. But, or the Green Cross Go ban, all those kind of things where they talk about nudging public opinion. And we need to come up with something proactive where we can actually be putting this message out to people. Don't commit insurance fraud. It's going to cost everybody money. You're going to get caught. You could get sent to prison. You'd be on the insurance fraud register. And by the way, here's the consequences. So we're working that up currently, and I hope to see that develop over the latter part of the year. And I want to talk about a more holistic approach to fraud, and I see I'm running a little bit behind time, so I'm going to have to whiz through some of these. There is a theory of diminishing returns. If you look at this slide, if your fraud leakage was A, and actually the cost of setting your fraud team up was B, so your combined total cost of fraud will be A and B. As you start increasing the amount of fraud you investigate and deal with, you're going to see your fraud leakage and your cost of fraud come down. But, and this is the point I made earlier, if you extend this too far along this axis, you're going to see your total cost of fraud go back up, and you'll end up spending more than you're saving, and that's no good for the company, and clearly it will be no good for our customers because, as I say, somebody has to pay for that additional cost. The difficulty is nobody really knows what X is. So there is an optimal point, and I think we're always searching for that. So if you can't just increase your claims-based fraud kind of strategy, you have to look around this end. So actually, what products are we designing? How are we pricing them? Who are we selling them to? What are we doing to evaluate the customers? How well do we know our customers? And actually, if you get that right, the logic says you can actually reduce your resources you need around here because you won't see as much fraud. And I know that from controls we have put in our company. You get a cleaner book of business and you actually get less claims and less fraud. Your loss ratio will go down. So moving on. And I've seen this happen where you have no front-end controls. This is a genuine network diagram of an application fraud. Back in the day, about 5 or 6 years ago, when the industry had an explosion with these ghost brokers, it wasn't unusual in those days for 50%-ish of your new sales, direct sales through your online systems to actually be midterm cancellations. In other words, they were fraud, half the book. And we were seeing this, along with other insurers, a massive explosion. And actually, I kept getting told, no, we had the best sales figures for the last month than we've ever had. So no, half of them will be fraud. And it took a long time for the penny to drop. So you need to actually work with your marketing team. And there's another examples I've got going back on that. Why did it come about? I think we all know the reason. Highly competitive market, rising cost of motor insurance, new online sales. So you can be anonymously there defrauding. And the automatic number plate recognition, so you had to have cover. We didn't have any controls or KYC. The payment systems out then were not PCI DSS compliant. We were all racing to bring in the controls, and it kind of took off. And these people will constantly look for ways over whatever barriers we put in. And it's easy to think that this is just restricted to motor. This is one example of a ghost broker online. You saw that. What do you think, that's genuine? Yeah? That's a fraudulent ghost broker site. This is where he was operating from in his office. And actually what he had in there, when the police went in, he had a sound system in there, and he had a cassette playing, which was playing office noise in the background. So anybody ringing up would think, oh, it's a big, busy office. You could hear all the hum at the background. There were 2 guys in this office making money out of ghost broking. And it has potential to get worse. Digital age. How many people now expect to do end-to-end transactional insurance on a digital device? I don't think we're all, from an insurance point of view, quite ready for the claim fulfillment end yet, but I don't think it will be long. Do we think this will be exploited if we haven't got any front-end controls? We certainly do. And you have to think about all the layered technology you could have in that will help you to defeat this. There's a whole raft of things, and I won't go through these. These are pretty obvious things that you should have. The temptation is to think it's only motor. Let me tell you, pet insurance, perceived very, very low risk. This is where everybody goes, look at the little dog. Do we know who the identity of the animal is? Not really currently, but we've got microchip which will hopefully help. We still write it in a very old-fashioned way. We don't quite use claim proposal forms, but we're not far off. And the sales channels in it are very diverse. And we have application fraud on it. Because every time one of the marketing people coming back to the marketing say, let's have a cashback scheme. So we'll go in, we'll give everybody £60 back for every policy they buy. And these guys just think it's Christmas come early because they just go on there, they'll use compromised cards, they'll purchase policies all night, get the £60 paid into their PayPal account. When we come in the morning, we sold 200 fraudulent policies and they've taken all the money out, it's gone. It happens. And it happens in households as well. Every time you get a cashback scheme or something, you need to really think about what you're offering in terms of this. Affiliate fraud. This is slightly embarrassing, but this is our affiliate site. So if you want to be an affiliate for us, if you read this bit here, here's the deal. You just host a more than ad or link on your website. Then whenever someone buys a policy, after coming through from that link, we'll give you money. Okay? And I know we're not the only company that does this, because I've seen others that do this. And what we do is we get an army of Chinese who actually go in overnight and taking out policies fraudulently and trouser in the commission and go in before we can catch them. So there's more than one way. So how do you avoid the pitfalls? Recognise that the web is truly worldwide. Do you know your business partners? So we might talk about actually knowing who our customers are, but do we know our business partners are? The fraud risks to be considered before products are sold, technology and so forth. And actually I'll pose a question, is this the new sort of special investigator or a fraud investigator we ought to be looking for? Because this is the kind of way that it's going to operate in the future with technology. It's no good having an ex-cop like me with, size 12 shoes bouncing around. You don't understand technology. The government, this is finally it, the government task force, so 90-page report, I think, or 89 pages, I think it was, 26 recommendations they came up with. I'm not going to list them all or go through the 89 pages, but these are kind of the main ones and I think this is an important one because it fits in with the piece I talked about earlier, is improving customer understanding of insurance products. And I know this has come up before, and they suggest that we should use examples like the CII's Made Simpler service, the ABI and BIBA's Code of Good Practice, and the FCA Smarter Consumer Communication paper. So actually, we should be telling people this is exactly what you're buying, and by the way, here's the consequences if you don't. Because they also say we should ensure anti-fraud messaging is targeted and hard-hitting. So it's a combination. So this is what you get with insurance, but actually if you abuse it, this is what happens to you. The ABI should consider its resources, and I think this was quite pointed because poor old Mark Allen, who is responsible for fraud at the ABI, is run ragged with all the work, and he's the only resource, dedicated resource. So I think the task force gave the ABI a bit of a kick to say you need to think about it a bit more. They support very much the IFB's 2020 vision and the improvement in intelligence sharing. They also said aggregators could do more, and I think actually they could. Have we got any aggregators here? I didn't think we would. I don't think there's particularly a skin in the game for them at the moment. They talk a good game and they say, yes, we're interested in tackling fraud, but I don't see where the skin in the game is really for them to actually defeat application fraud. But, that's a matter to take forward. Board, they said board level ownership of counter fraud activity. Coming back to my strategy slide, where you must have executive buy-in to it. The voluntary best practice guide is probably not dissimilar to that map that I drew, and in fact I'm sitting on a subgroup which is developing that, and it won't go into detail. It will be at that sort of level. So if all the major insurers have got this in place anyway, but if a smaller company out there actually has nothing, it's a list of saying these are the kind of things you should consider, but without being prescriptive. The government should establish a legacy vehicle to ensure these recommendations are taken forward. They're still working out what that looks like, but that's probably a sensible idea. So if these are just left on the table, then frankly nothing will be done. So there's going to be a legacy vehicle to take them forward. We should remain vigilant of emerging fraud risks. Yeah, absolutely. And the government should deliver a coherent regulatory strategy. And these are all around the claims market that has grown up there. Hands up here, anybody not had a nuisance phone call trying to talk about the money that you've put aside for your accident or so forth? It drives us all mad, doesn't it? And they're talking about that we need to regulate, the government should regulate this, and then there's a whole piece around requirements on lawyers and so forth. And they do mention in here about actually a fixed recoverable costs regime for noise-induced hearing loss, which would take the skin out of the game for the lawyers, £14,000 of cost, which is outrageous. So I think I've got about 5 minutes left. So I'm sorry I've run slightly.
John.
But thanks for listening to me. Any questions before the alarm goes off?
Thank you, John. A really informative and interesting presentation there. Interesting you mentioned about nuisance calls. I was with the FCA the other day, and the head of communications at FCA said she was sitting in her office and she had one of these calls about her son having an accident. And she said, I don't have a son. Oh, was it your husband? She went, no, I'm the head of communications at the FCA. And the phone went down rather quickly. So they are getting the calls as well. So, ladies and gentlemen, the floor is open. So, any questions from the floor? Well, yes, thank you. If you can wait for the mic, please, sir.
May I pose two questions? The first one is, you talked about the part of the fraud that we're not detecting today. Do you have a feel for how much of that's attributable to organised crime and how much is opportunistic?
It's always a very difficult question. I would say that the organised element is relatively small. I would put it probably in low double digits. So I would say 80-20 would probably be not far out. I have seen some stats on this with work that's been done, but I would think that would be the sort of rough split. It might be 25-75, but say 20-80.
So following on from that, you talked about making the public aware that this is a real crime. And it strikes me that there's a parallel between this and the struggle that the film industry or the record industry goes through. And it took more than a decade to get it recognised as something that's equal to stealing a car or something. What's your feeling about that?
To equivalent with what? Sorry, I missed.
So it took more than a decade for the film or the music industry to get people to realise piracy.
Oh, yes.
Right.
Yeah, absolutely.
I wonder if you saw a parallel here and what sort of timeline.
I think there are parallels. I can't remember if they had. I think they ran a campaign in the end, didn't they?
Yes.
I seem to recall. Yeah, I think it's similar in that way. Maybe there's lessons we can learn from what they did. So we're at the stage at the moment of actually saying we need to do something. What can we do? And then obviously there's a cost and investment element to it. I mean, I was out in Ireland about a month ago speaking to the Insurance Ireland about their campaign that they've introduced, which seems to be very effective. Again, we're hoping there's lessons we can learn from that. So We're still in early stages. We did approach this about 3 or 4 years ago, but we just naively got some companies, media companies, in to quote. I mean, if I told you the quotes that they came in, they were eye-watering. I think it was about £4.5 million, and we'll run this campaign for you. You know, it was just ridiculous. So we're actually going about it now in a much more thought-out way, hopefully. Yeah, so watch this space.
Thank you for that. Any more questions from the floor? John, I have a very quick one for you.
Yep.
You obviously mentioned IFED and the fact that the City of London Police are involved in it. What actually made the police suddenly sit up and think, hey guys, there is a fraud on this and it could be quite substantial? Because, as you rightly pointed out, they just weren't interested.
Okay. Honest Indian?
Yeah.
I think it was a combination of...
You, obviously.
It was a combination of, we were thinking about how do we drive more police involvement, and we did get some police interested. But, and of course, at the time, there was huge cuts going on in the police service, and they were talking about 20% cuts in the police, and I think they saw this as an opportunity to actually ring-fence some of their so that it was almost mutually beneficial. So I think that was one of the drivers, but they also saw insurance fraud as being an untapped response from police generally. And we have had a knock-on effect. So when IFED have actually raised the profile of insurance fraud within the police service, almost inconsequentially, so that they're seen to be tackling insurance fraud, and it's actually made other police forces react to it as well. So we had more cooperation from local police forces than we had pre-IFED.
Excellent, thank you. Ladies and gentlemen, that sounds like...
Sure I don't overrun.
Will you please join me in thanking John for a brilliant presentation?